All right, welcome to this VAT Mechanics Explained lesson. I believe you can hear me clearly and you can see my screen. If you are watching live here, you can comment that you can see my screen and also you can hear me clearly. Can you please confirm that you can hear me? All right. If you can hear me and see me clearly, let's get started. So this lesson, we're going to explain what are the VAT mechanics, what is VAT, and the current changes that happened in terms in regards to input tax claiming. So we need to define what VAT is first. So VAT is a consumption tax which is imposed on the final consumer of goods and services. Previously, we had what we called sales tax. This one was not charged through the value chain, like from manufacturers to distributors. It was only charged on the final consumer. So VAT came, which charges VAT throughout the whole supply chain. So it's a consumption tax which is meant for the final user or final consumer to pay. So it's paid by everyone. So on companies, we have what we call VAT on sales, which is called output VAT or output tax. So when you are making sales, the one that you are collecting on behalf of the government as a company or as a business is called output tax. Then the VAT that you pay during your purchases as a business is called input tax, right? Or input VAT. So you need to understand that whenever you make sales, that is output VAT. Those you make on purchases is input VAT. So if you sell zero-rated supplies like exports, you still claim input VAT. So what happens here is that if you are an exporter, you don't charge VAT, right? Or you don't collect, or your items will be zero rated. But all the purchases that you incurred and you paid VAT, you'll be able to claim that input tax. Are we all clear? All right. So that's the mechanics of how VAT works, right? All right, let's move on. Then if you are in an industry where you sell exempt supplies, like if you are providing a service in finance and insurance, you cannot claim back input VAT, right? You will not be able to claim VAT that you used on purchases in your business. It will be just a cost to you and you will not be able to claim that, right? So where is VAT applicable to? So VAT is applicable to supply of goods and services by a registered operator, right? On or after the fixed date in the furtherance of trade, except for second-handed vehicles. For second-handed vehicles, you will not be able, you don't charge VAT. For second-handed vehicles, there is an excise duty that is collected on second-handed vehicles. Then also, where do you pay VAT? When you are importing goods into Zimbabwe. When you are an importer, you pay VAT automatically at the border. by any person or company, you pay VAT when you are importing goods. Then supply of any imported services by any person, they needs to pay VAT as well. Then goods and services sold through an auctioneer by non-registered operators. So this is where VAT is applicable to, right? So would want to give an example of different questions depending on different supplies so that you can easily understand that. So we have these three questions here, and we have what is the VAT position of the three companies. So let's start with number one. Nexa Limited is a trading company selling office stationery. Its annual sales are 200,000, while its purchases, right? It's 200,000, right? These are annual sales, while its purchases are 120,000. The sales are VAT exclusive, but purchases are VAT inclusive. That means this 200,000, it doesn't include tax. So the standard rate for 2025, without mentioning the proposed one for 2026, it's 15%, right? So 15% of 200,000 let me use my calculator here. So 15% of 200,000, that is 30,000. That is 30,000, right? Then that is the output VAT. Now we want to check input VAT. So we have been told that 120,000 is inclusive. So for us to find the component of tax in this 120,000, we say 15 over 115 times 120,000, right? So if we say 15 divided by 100, we get 15,652, right? So that is our input VAT. So our question says, what is the tax position or VAT position of these three companies? So this one, the one that we need to pay to Zimra as VAT will be 30,000 minus 15,652. So the tax that will need to be paid is 14,348, right? So this is the standard way where a company is selling office stationery, which are taxable supplies, right? These are taxable supplies that are charged the standard rate of tax. Then we have another question, number 2, whereby Aligned PBC is a trading company selling exports. So as we said, when you are exporting, you don't charge, your supplies will be zero rated. That means for this 200, your output tax 200,000 times 0%. That means you have new on output tax. Then while its purchases are 120,000, that means you'll be able to claim back your input tax of 15,000. This is the same question as the above. Only the difference is that we now have exports. So you need to get a refund from Zimra of 15,652. The reason why they do this is that to promote generation of foreign currency and also to allow businesses to strive so that they can export goods and services, so that the balance of trade is balanced. So this is the concept. So in this regards, that means you need to get a refund or a credit into your terms account of 15,000 if you are exporting. Then we have another question whereby Apricot Microfinance is a financial lender company. Its annual sales are 200,000, yes, while its purchases are 120,000. The sales are VAT exclusive, but purchases are VAT inclusive. So this company sells what we call exempt supplies. The exempt supplies, that means they are not able to charge or to collect VAT, and also they will not be able to claim the VAT in their purchases. So in this regards, the tax position in these three different questions is that in this Apricot, they don't have to be registered for VAT. They don't need to register for VAT. Then this one, they will be able to claim back their input tax if they are selling zero rated supplies. And this one, they will need to pay to Zimra the difference between output tax and input tax. Are we all clear on this one? You can't hear me. Can you please confirm that you can hear me? Can you please confirm that you can hear me? All right, so continue. So this is for different uh, 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 supplies or different companies in different industries. So we want to touch on VAT registration. So we have compulsory VAT registration. So if your sales surpass 25,000 per year in USD terms or equivalent, you are required to register for VAT. So on registration for VAT, there is a historic test. There is a historic test and also a future test, whereby by historic test we mean that your taxable supplies in the last 12 months exceed 25,000, right? So you need to notify or register within 30 days of reaching the threshold and start charging VAT the next month. So VAT, they assume that you need to start collecting VAT on the first day of the month. Let's say you register in March. They would say that you should have registered, you should start to collecting on 1 March. So on the requirements of VAT registration, they will need your sales schedule, right? Your bank statements, right? Your lease agreement, a letter of appointment of public officer, right? Then also you need sales forecast. If you have contracts that you have with different companies, you are required also as well to 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 send those as well. Then also you need I said bank statements, sales schedule, lease agreement, letter of appointing public officer. Then the future test on compulsory registration. You expect that your taxable supplies in a single month to exceed 25,000. Let's say you are registering for a tender, or you applied for a tender. Once your tender surpasses, or your price surpasses 25,000, you are now automatically registered for VAT. So if you are doing your tenders, if you are charging something that surpasses 25,000, you need to factor in VAT in that tender documents, or your invoice, or your quotation. You need to add VAT so that you are not caught off guard, especially when you are dealing with the government. So whenever you reach your sales target of 25,000, you need to register in the same month and start collecting VAT on the first day of that month. So here we have an example of when you should register for VAT. So we have a question here on compulsory VAT registration, whereby you are running a tuck shop, you are selling groceries, and your sales per month are $900 in the first quarter, and 3 months thereafter. This is using historic test. It's now thereafter you are now selling 1,600, and it will increase to 2,000. So in this regard, we see that you will not be able to reach 25,000 by the end of year, right? So you not register for VAT in that 2024 year. So your financial years for ZIMRA purposes runs from January to December. So your consideration should be January to December in regards to sales, or you should work with 12-month period. Then let's say another question whereby Betty is a graphic designer with sales of $600 per month. She then signs a contract in May 2024, giving her extra sales of 24,800. That means in May, she must register for VAT because she has surpassed the threshold. Especially if you are dealing with the bank, if your transactions come through the bank, you need to consider this as well, because now with Tarms, it's easier for them to see the activity of your bank accounts. And if they request your bank statements, if it proves that you should have registered for VAT and you have not yet registered, you get penalties for missing that registration as well. So here, when should Betty be VAT registered? Betty should be registered in May, as she surpasses that threshold of 25,000, right? Then also you are able to register voluntary VAT registration. What are the advantages of registering voluntarily registering for VAT? Whenever you start making taxable supplies, you can register for VAT voluntarily. What are the advantages? One advantage is that it hides the small business size, especially if you are dealing with companies that would want to deal with reputable companies. It will hide that small business size. They would think or see it as you are organized, and also you are not a small company. Then also it avoids late registration penalties. Those penalties, if they catch you off guard, they will be hefty. Then also you can able to claim back input tax quickly. So I would advise, if you are dealing with corporations, mainly business to business, you can voluntarily register for VAT early on, so that you will be able to claim your input tax, as well as deal with those companies that hides the small business size. What are the disadvantages? It will increase your administration costs, because with the VAT, now there needs to be proper tracking of your sales, and not making errors. So it will likely increase your administration costs. Then if you are dealing with customers, direct customers may not be who are not VAT registered, or they might find your prices more expensive now, because you might need to pass on the cost to the customer. And if you are dealing with customers that will not be able to claim that tax, they would find your products more expensive. Then also, the risk of penalties for negligence or fraud, especially if you register early on without understanding what are the pitfalls of not keeping proper record keeping for VAT. You might find that you might find your risk for penalties in negligence or fraud, as they might assume that you are stealing that VAT, right? So this is for voluntary registration. So the voluntary registration is the same for the requirements are the same when also you are registering on a compulsory basis. So I would want to say about pre-registration input VAT. Let's say you bought a machinery for 100,000, right? You bought this machinery and you paid VAT for it, but you are not yet VAT registered. You can claim the VAT even after let's say, for example, you bought a machinery in the previous 12 months, you were not yet VAT registered, right? Then you become VAT registered, you are able to claim that VAT on that asset you bought. So this only applies to goods. Let's say it's stock, your machinery, your equipment, you'll be able to claim that input tax. So you need to be aware of this, but you'll not be able to claim VAT on pre-registration services. For example, your rentals that you paid in January, February, when you are not yet VAT registered. Now you register for VAT in June, right? When you register in June, you'll not be able to claim those previous invoices. But if you bought stock in January, you are able to claim that input tax if you have the, and that output tax in terms, it feeds to FDMS. So whenever you are making sales through your accounting system or your point of sale, whether the fiscal device is working or is not working, you should factor in all the VAT that you sold in that month, right? Let's say another invoice of 2,000 has errors, VAT. So these days they follow a chronological order number of invoices. So if you have a system, it produces a sequential order of numbers, 1,000, 1,001, 1,002. So if they find inconsistencies in your chronological order of sequence of invoices, of invoice numbers, they would also want to see why you are skipping some invoices and it's not allowed. Then now with FDMS also, starting 1 December, tomorrow, all invoices now should be done on automatic input claim. So previously, we were claiming invoices and preparing what we call a VAT schedule or input tax schedule, whereby you list all the invoices, VAT number of the suppliers and the amounts and what was sold, then submit with your return. But now the process will be automatic in Tarms. So this is the user interface of the invoice management system in Tarms. So if you log in into your Tarms account, you'd find that there's this section where it's written invoice management, whereby you'll be able to see your purchases, the purchases that you made starting tomorrow, with your details, your company name, right? Your VAT number, your TIN, and your address. So for this process to work, whenever you make a purchase, you need to put your company name, your VAT, your TIN number, and your address, so that these invoices will automatically come on this invoice management system in Tarms. So what will be the process of now doing the VAT return? So the process that will happen is more like what happens when you are doing payroll, payee returns, whereby whenever you are buying, your invoices will be here, right, with the company name of the supplier that you bought, their VAT number, their price, including VAT, what was the input tax, and the currency, right? So whenever you have these invoices, when now you want to do a return, you would come to this invoice management system, invoice management module. Then you select the invoices that you want to claim, right? So you come here and say, yes, you want to claim this one. Then you tick here, right? You tick here, you tick here for that period. Once you have ticked all the invoices, now you go to your upload claims now in Tarms or under invoice management. Then you say you want to claim invoices for the year of 2025. What is the tax period? July, right? Then you submit. So once you submit these, the computation or the summation of all the invoice amounts and the input VAT will be done by the system, right? And you'll be able to see, this is the FDMS portal. It is not yet active. I think it will be active tomorrow, whereby you'll be able to see all your invoices and your company name and your details here, which is a bit different from Tarms. So you'll be able to see the physical devices that you have, the branches, and the dashboard. So this is more like an FDMS structure, which you'll be able to access. So this section of claim input text, it will not, now you will not be able to edit this section. The computations will automatically appear here based on the purchases, the correct purchases that you made, and the upload claims that you claimed. So here, previously we were able to put an amount here. Let's say we would type 1,600. Now the system will automatically put the input text. However, this only applies for local purchases. Whenever you import goods, you will still need to manage to do manually. They are not yet integrated with Ascuda, but there are plans that they would want to integrate as well, Ascuda and Tarms, so that whenever you import, your VAT on your customs will automatically populate in Tarms as well. So this section will not be able to edit this. So you need to make sure that whenever you are doing your local purchases and you are VAT registered and you want to claim your input tax, you need to make sure that your invoices that you are given are valid invoices. So your invoice should have a QR code which is scannable through your phone, and also your details should be correct so that they automatically appear in your FDMS or in your Tarms invoice management system. So this is the new structure of how Tarms will be, input text will be collected. Then also on the section of credit notes, you will not be able as well to edit this section, right? So this is the structure of how the changes have been made in Tarms, right? So this is the structure of how the changes, and I believe you have understood how this will affect your return management and also how to claim correctly your VAT. So if you haven't yet enrolled for our upcoming cohort starting to Tuesday, that is 2 December, you can enroll. Enrollment is closing tomorrow, so you have time to enroll and learn the tax basics on all tax types. So this we have payee, right? We also have corporate income tax. Then we have VAT as well. Then also you learn how to use your digital tools like Excel, the basics, Excel and Google Sheets. So enrollment is closing tomorrow in the evening. So if you haven't yet enrolled, you can enroll for the upcoming cohort starting the day after tomorrow. So I believe this webinar was helpful to you. And if you have any questions, you can ask in the group so that we can help each other. Thank you very much for attending this webinar. See you soon.